Alrighty, good morning, everybody. It is Friday, October 20th, 2023. Looks like the market is continuing to just sell off. And we're just going to do a quick review here for yesterday, and then we'll get into the pre-market for this morning. So let's scroll back here, take a look. I think I forgot to put the vertical line up, so give me about 2 seconds to do that. Just so we have a place marker there for the open yesterday. Okay, so first of all, I do want to bring up the report, see what we were saying here. We had some news throughout the day, Fed speak throughout the day. Sometimes that's not a great thing when you have the balance sheet being released. You have Fed speak. Like I said in the pre-market yesterday, it could be a little bit choppy, a little funky, but it's hard to say. But major bearish clues from last week's high and this week's high, getting some follow through with some clues for an attempt to bounce. So yesterday we did have some potential daily and 4-hour clues for the bulls off of the low of the overnight session there. But as you guys can see, it didn't really get anywhere there. And so what we were looking at here was basically the bulls are trying to hold the market up right around 50% of the retrace of that bullish rally. So if we go down, we go up to the higher time frames and take a look at this sell-off here. I mean, this is the October rally. That's the low of October on October 2nd, 3rd, or 4th there. Got this bullish push. We did have all of our signs for the bulls there that day. And then it started to retrace, and yesterday we were sitting right over here, right around 50% of this whole push up, right? So there were some clues that, hey, not only did we have, only was price testing the 50% retrace of the October push, but we were also getting that hourly bullish signal from the overnight lows. We had a little bit of what I said was not my favorite, but some arguments for a 4-hour bullish divergence from yesterday's low, the overnight low. And then the daily, what we were seeing up here as well is as price was pushing lower from this previous swing, we were getting price pushing lower, but RVI was higher. So we had the beginnings yesterday morning of the potential for that bullish signal to start to form. And as you can see, there's the low of the overnight session as we did our pre-market, and the market continued to sell off here. This has continued to come down lower. And at the moment, we do technically still have kind of like a potential there, right? Because if we don't break 41.1 here on RVI, we would be pushing lower on price, and we would be either the same or higher on RVI. So still kind of there. But anyway, that's kind of getting away from our pre-market here, or our review here. So there's that retrace of the 50% rally. We pushed through it, obviously, yesterday. There may be an attempt to bounce this morning with those bullish clues. In order to have any faith in the bulls today, we want to see price push above the pocket, have 43.63 to 65, and above the 61.8 retrace of the current sell-off at 43.89. Now, what was the high of yesterday? Anyone want to take a guess what the high was? Well, let's take a look. 43.63.75 to 65.75. Basically 43.64 to 66 was our first pocket that we wanted to see the bulls get through yesterday. If we look here at, and I actually go back to my drawing objects here, went ahead and hid the drawings from yesterday. So let me bring those up. Basically these rectangles. Let's make sure they're all visible. So yesterday, this is what we drew on the charts coming into the open. We said this pocket right here, 63 or 64 to 66, would be the first area that we would want to see the bulls get through for any type of bullish bias coming out of the open or throughout the day. And the high of the day, what do you know? If you zoom all the way in and look, was 43.66 half. So it pushed through the top end of our pocket by 3 ticks, and that was the high of the day. Now, if you look, not only was it a 50% of the previous week, which is that dash dot dot magenta line you see there, it was also 50% of the previous day on that day, I believe. It was also a major swing. So if you look back, and there's a reason, guys, that we mark these swings. I tell you this every day. This right here, what's that low? 43.65.75. What was the high of yesterday? 66.75, right? 40.66 half. So it came right into this last major swing that we put on the chart here and got the major rejection from there, right? So there's that major swing sitting there. It was 50% of the day from the day before. It was 50% of the previous week. It was a major market scaffolding area. There may have even been more, but basically that was our line in the sand for the bulls yesterday. So an expectation of that being a resistance area, and sure enough, that was the high of the day. So yesterday was another situation where the high of the day was a pocket we were watching as expected resistance, and then the low of the day was our scaffolding level, another potential support area. So that is the first pocket we expected to hold, and there's the failure. Second pocket was going to be up around the 61.8, and then finally all the way up to the high of last week. And then we had some targets to the downside for the bears, ultimately down to this pocket around 42.65, 42.66, 42.67-ish, right? So let's look at the details here on the 512. And again, it was a very heavy market. We said that we wanted to see the bulls get through at least 50% of the day before we were doing anything on the bullish side of things. So let's go back to the open here and take a look what happened. Market played around off the VWAP multiple times yesterday out of the open, came up and failed right off the close of the day before. Okay, a textbook level that we watch every day where we see major rotations in the market. Came right to it, broke by 2 points, and then we failed. Some great opportunities to get short off the 200 here. As the market was selling off, there's a crossover right there. There's the break down below the low of the day before. So getting short off 200 would have been a great play. It only went 5, 6, 7 points in your favor, however, and then obviously had a lot of trouble. There's that major retracement we were kind of holding around. And then finally, we got this little fake out only to take the sellers or to take the buyers back out. So basically what happened, rally right up to our expected area of resistance. That's 63 to 65, 64 to 66-ish. Came right in, failed. And then as the market came back, there's your crossover. And then here is the break through the VWAP. Then it was a seller's market. And it got very, very difficult for basically the second half of the day. Once this happened here, and it became really obvious what we wanted to do in terms of selling this being bears, they faked everyone out and brought it all the way back. So if you didn't capture some money on the sell-off out of the open or trying to buy VWAP, maybe to grab a 5-point bounce if it even got that. The only other thing that really was super sexy yesterday was to get short from here. And then everything else, like I said, the rest of the day was pretty messy because they kind of faked all the bears out and then brought it right back to the high of the day. So despite the fact that it was choppy, I mean, you can see holding the back end here as the market finally failed from our expected major resistance point, and we got the failure through VWAP and down through the low of the day before, you did get a great opportunity, which was a kiss right into that area for about a 10-point or an 8-point pullback. So I would have definitely been able to get my 5 points there. But that was really the only sexy thing you could have done. The rest of the day, again, was pretty busy there. We did get some nice pullbacks, break into the scaffolding pullback, hold the FMA, come through it, and then hold the top end of the scaffolding. Another textbook type of thing we see happen very often. But again, just kind of messy there at the end of the day. And then finally, as the day ended, we got this really high volume sell-off. So what can I say? It got a little tricky there. And then finally, we got the expectation for the push to lower lows. On the way down, yeah, there were some good holds off the back end of the 200 here if you wanted to try that. Obviously, you can see they tried to hold the low of the day before for quite a long time and then finally lost steam, came down, and then held the back end of the scaffolding. Now, if we look at this again, I've been bringing this up pretty often, in terms of these kind of stair-step, ladder down our levels, if you do look, I mean, the top of the day was our scaffolding, came down, got down below the next scaffolding, held that, Okay, then the market continued to push lower, and then we held the back end of this scaffolding. So literally, the three major scaffolding levels on the chart, if you were to short them yesterday, you would have taken on nearly zero risk and gotten yourself the whole sell-off, right? So maybe you missed out on the short off the back end of this one. You could have grabbed this one here. Again, very limited risk, maybe about a point. And then if you missed that one, you could have shorted at the end of the day to the tick off this scaffolding and gave yourself about a 10-point pullback to finish the day with. So again, just really blows me away every time I come back and look at this stuff. And then that, like I said, the low of the day was our next scaffolding level nearly to the tick. So the high of the day, this is another day. Seems like it's almost every day in a row. High of the day, major expected resistance area where our scaffolding was. Low of the day to the tick was our next scaffolding level, right? And then as the market sold off, it held the back end of the scaffolding levels that we had on the chart. So still just blows me away. And then here we are in the overnight session, pretty damn choppy. We did hold right around this new level I added, 43.02. It's just kind of a regular support and resistance that maybe I'll add as a actual official scaffolding. But for now, as you can see, it worked great yesterday. The market came down to 02 and held and held and held, and then came down to the next area in the chart. So that 02 area, and then you can see that basically the high of the overnight session just peaked through 02 and got the pullback. So watching that, maybe we'll make that an official level. But that brings us here into our pre-market for this morning. Like I said, the overnight session, super choppy. Nothing really to highlight about the session outside the fact that the low of the day before in our scaffolding level was basically the perfect bifurcation of the range, right? So if you were to look at this, the high of the overnight session down to the low, what was 50% of it? The scaffolding level and the low of the day before here, right? So they've been kind of just what one of my friends says is building the profile out here, right, on the market profile. But pretty interesting to note that it seems like even when we're in situations of chop, the levels that we trade with are basically bifurcating the range and then giving you the high and the low of the range very, very often. So pretty cool stuff. Anyway, let's go ahead and jump into the pre-market for this morning.